Hey everyone, welcome back to the channel. Today we're diving into a hot topic that's on every finance enthusiast's mind. Is the end of quantitative tightening, or QT, near? Big moves are ahead, so let's get into it. First up, QT is about to end. US bank reserves as a percentage of GDP are at their lowest level in 4 years. Why is this crucial? Well, Fed members have mentioned they're likely to stop QT when bank reserves hit anywhere between 9% to 11%. We're getting close, folks. The Fed has been holding off on supplying liquidity for the past few years, but that's about to change. Now, let's talk about rate cuts and economic momentum. The Fed is starting to cut rates while the US economy is gaining momentum. This combo speaks to stronger growth ahead. Picture this: rate cuts plus an end to QT. It's a recipe for a growth surge. Switching gears to China, stocks there just had their best week in 16 years. Why? A liquidity boom. The PBOC, or People's Bank of China, cut the reserve requirement ratio multiple times last week, adding over 1 trillion yuan to the system. They also lowered existing home mortgages, benefiting Chinese consumers. Global liquidity is turning higher. The key takeaway here is that we're likely to see both the Fed and the PBOC turning on the liquidity fire hose while the global economy is picking up momentum. While many are betting on a recession, growth is on the rise. The two largest central banks are about to add fuel to the fire. So watch out for some big moves ahead. Now let's talk stocks. The US stock market has been driven higher, largely due to optimistic expectations around the growth of artificial intelligence. But non-US equities have severely underperformed. Global growth expectations are extremely low. Remember, the US stock market is dominated by tech stocks, while non-US equities are more sensitive to economic growth. What does this mean for you? We could be seeing a liquidity boom marking the end of a decade of US equity dominance. Keep an eye on stocks in Europe, emerging markets, and commodities. That's it for today's video, folks. If you enjoyed this deep dive, make sure to hit that like button and subscribe for more finance insights. I'll see you next time.